And Vodacom has reported a 10.8% decline in headline earnings for the year to end March. The telecoms operator has cited a combination of startup losses in Ethiopia and higher finance and energy costs at some of the factors that weighed on the profits. The performance has meant a cut in the payouts to investors. A final dividend of 285 cents per share has been declared. This takes the total for the year to 590 cents, which is down close to 12% from a year ago. But looking ahead, Vodacom says it will look to expand its partnerships across Africa to power the group's growth. And the firm also highlighted that while the group economic outlook is uncertain, it's encouraged by the recent macro reforms in Egypt and Kenya. And joining me now to unpack that performance is Vodacom CEO Shameel Joosub. Shameel, always a pleasure and a good afternoon to you.
Thank you, Nadia, and thank you for having me on the show.
Brilliant, Shameel. Let's get right into it. Revenue is up. We are seeing a lot of the key metrics is up in the green. Help us make a sense of the numbers in the environment that we have, not only here in South Africa, but across the continent as well.
Sure. So I think, we're quite pleased with the results, and I think also some of the underlying growth factors. Having said that, of course, as you mentioned, earnings are down, but it's been impacted by a number of one-offs that we've taken a hit on this year. But I think we're well poised for growth going forward. So customer-wise, 203 million customers now, up 9.2%. So, I think we've had a strong growth in customers. 79 million financial service customers, up almost 12%. So, very strong in that respect. Revenues up to 150 billion rand. If we include Egypt in the base, so we're doing a like-for-like comparison, then revenues are up 10%. And then EBITDA, coming in at 56 billion. And if we include Egypt in the base, up 7.8%. So we're well within the guidance that we've given to the market. So I think very positive in that respect. Of course, earnings itself being impacted by the devaluation that happened in Egypt. So we took circa 2 billion rand knock on that. And then also had the impact of interest rates having gone up almost 60% because of the acquisition of Egypt, but also because we've seen a increase in the interest rates cycle. So, I think, those two big things that's impacted the share price by over 150 cents a share just in those two items. And so, I think what's encouraging is that, we're seeing strong performance across the board. So very strong performance in Egypt, the business having grown 52% in terms of local currency, but even when we bring it back into euros, 6% growth in net profit, 22% in rand, so very strong in that context. We've seen very strong growth in in Safaricom, which is our second segment, with that business growing, 16.9% in EBITDA, so very strong growth there. And then our international segment, which is Tanzania, DRC, Mozambique, and Lesotho. And we had a standout performance in Tanzania, a very good performance in the DRC, offset by Mozambique price transformation, which has since been corrected through regulatory interventions that have introduced price floors. So that puts us in a very strong trajectory going forward. And then South Africa, the results were, although we held share and outperformed the market, I think the reality is that the South African context was subdued. Flattish 0.7% growth in EBITDA, even though our customer base grew and our new services grew strongly. But I think the issues come from costs. So the prepaid customer being under pressure, and then of course load shedding and the impact on energy and related cost, security, energy, and so on, have impacted our results this period.
Actually, this one actually is staying with South Africa here. I think pointed out in the sense this morning was the issue of work from home and the decline in that trend and how it is reflective in the set of numbers. Please help us shed some light on that one.
Yeah, so what you're seeing in the enterprise segment is that, the enterprise segment, excluding wholesale, was up 3.8. Normally, we'd expect a stronger growth in the enterprise segment. But what we did see is that corporate started to scale back. especially as people return to office. The work from home packages that companies were subsidizing have reduced substantially.
What's also very interesting, I think, Shameel, just also looking at the presentation released this morning, I want to speak about product diversification. You have the strategy here for a balanced portfolio, maybe looking at the mix that currently sits and where you are trying to move towards.
So what we're trying to do is to make sure that we can diversify our revenues. Today, 20% of our revenues come from beyond mobile, as we call it, which is coming from fixed, IoT, financial services, and digital services. And this is not a small amount. This is about a 30 billion rand envelope just on financial services alone across the group. And so what we want to do is improve the contribution that comes from these services. So currently we have about 20% of operating profit coming from these new services, and the intention is to take that to 25 to 30% contribution. So I think, and we're accelerating with financial services growing over 20% and growing so strongly, and us processing $1.1 billion every day of transactions. We're well poised to continue to grow the momentum in these businesses.
Should we also shed a light, please, on the issue of consumer wealth? That was an interesting part of the presentation this morning, specifically because, many non-banking, companies don't look to a wealth segment, but Vodacom already thinking about that. Help us unpack that, please.
So we see a big opportunity in driving a savings culture across the continent, and I think governments would be quite excited about that as well. And so giving people the ability to invest money, and let's be honest, the big banks don't want your money if you've got 100 Rand, 200 Rand, and even up to 10,000 or even 20,000. So this gives you the ability to invest. You'll be able to move your money into unit trusts, into money market accounts and so on, and basically be able to invest that wisely. Of course, the intent is to make sure it's a platform, so you bring on products from a lot of institutions, and hopefully a lot of our South African institutions' products will be on there as well, and that will then be sold through the platform. And you saw it with Alipay in China, just how big that money market fund and those investments have become.
Very exciting stuff indeed, Shameel. It's all we have time for this afternoon. It's been a pleasure hearing from you and looking forward to witnessing that strategy roll out. That was Shameel Joosub, as CEO for Vodacom.